Unemployment on the rise, a major retailer files for bankruptcy, but the markets keep moving up. This is the Civil Reports Weekly Review, where we take a look at the headlines that move the markets during the week and all things investment related. On Monday, the market started the day down. Investors were worried about the impact of the country reopening too quickly and possibly sending the U.S. back into a shelter-in-place state and causing another major drag on the economy. But those fears didn't last long as markets closed up on the day. The Dow closed up 26 points, the S&P closed up 12 points, and the Nasdaq closed up 105 points. In other news that moved the markets, airline stocks sold off on Monday after Warren Buffett discussed selling Berkshire Hathaway's airline positions due to the coronavirus pandemic. Delta, American Airlines, Continental, and Southwest all were down on the day. J.Crew filed for bankruptcy, making the company the first major retail casualty of the pandemic. In other news, Skyworks Solutions reported an EPS beat by 1 penny and a revenue beat by $950,000. Skyworks reported it did not experience a significant disruption due to the coronavirus and expects revenue of $670 million to $710 million for its next quarter. And the company declared a dividend of 44 cents. Shake Shack reported an EPS beat by 3 cents, but a revenue missed by $2.1 million. Same-store sales fell 12.8% in Q1, and average weekly sales for domestic company-operated Shacks decreased to $65,000 from $79,000 from the same quarter last year. On Tuesday, markets strung together a second green day in a row. The Dow closed up 133 points, the S&P 500 closed up 25 points, and the Nasdaq closed up 98 points. The slow reopening of the country continued to motivate investors to buy stocks, but it wasn't all good news on Tuesday. Norwegian Cruise Line reported that it had substantial doubt about its ability to continue in the current environment. A few big names dropped earnings on Tuesday, but it was all about Disney. The company confirmed speculation and rumors that it was facing liquidity issues. Disney reported an EPS miss by 30 cents. Earnings per share fell by 93% during the quarter, but they did beat revenue estimates by $510 million. The parks, experience, and product segment of the business was down 10%. Disney advised that its direct-to-consumer segment would record an operating loss of more than $1 billion during the next quarter. Disney also advised that it will not be paying its semi-annual dividend that was to be paid out in July. The move is expected to save Disney $1.6 billion. The good news for Disney is Disney Plus. The streaming service surpassed 50 million subscribers during the quarter, and ESPN Plus subs came in at 7.9 million. The global social distancing order has caused havoc on the Disney businesses, with production halted on a number of projects and cash running low. What does the company do now? It could issue more debt, it could issue more stock, or it can make movies like Mulan or Black Widow available for digital purchase. On Wednesday, the Dow Jones started the first 15 minutes of the day up, but then faded and sold off drastically closer to the close of the day. The Dow closed down 218 points, the S&P 500 closed down 20 points, but the Nasdaq closed up 45 points. On Wednesday, President Trump stated China may or may not keep the trade deal, giving investors a flashback of the tensions created between the U.S. and China as they tried to figure out phase one of the trade deal. ADP released market data, which also helped to pull the markets down, showing that private sector employers had lost more than 20 million jobs in April. In earnings news, Square reported an EPS miss by 15 cents, but beat revenue estimates by $80 million. Q1 gross payment volume increased 14% year over year, but missed consensus. Adjusted EBITDA came in at $9 million, down from $62 million the year before. Shopify beat EPS estimates by 36 cents and revenue by $27 million. Revenue grew by 46% year over year, and subscription solutions revenue grew 34%. The company suspended previously given guidance for 2020. PayPal missed EPS estimates by 8 cents and revenue by $100 million. Investors were expecting good news from PayPal as the stock hit an all-time high earlier in the day and closed up 8.5% in after-hours trading. Lyft beat EPS estimates by 5 cents and revenue estimates by $125 million. Sales increased by 24% and adjusted net losses came in at $97 million, down from $211 million last year this quarter. Lyft was up 16% in after-hours trading. And GM beat EPS estimates by 28 cents and revenue estimates by $1.3 billion. Revenue was down 6% year over year for GM. On Thursday, all three markets closed up. The Dow closed up 211 points, the S&P closed up 32 points, and the Nasdaq closed up 125 points. The Dow was up over 300 points at one point during the day, but it was unable to maintain that momentum. Investors took the rise in China's overseas shipments as a good sign, and oil companies traded up on that data. The market shrugged off another 3.2 million Americans filing for unemployment last week. Twilio played a big part in moving the markets up. On Wednesday, it reported an EPS beat by 17 cents and a revenue beat by $36 million as the demand for cloud-based communication continues to increase. The stock was up 39% on the day. Thursday was another big day of earnings. Roku lost 45 cents per share, which was in line with analyst estimates, and the company beat revenue estimates by $11.7 million. Revenue was up 55.3% year over year. Uber reported an EPS miss by 80 cents, but beat revenue estimates by $170 million. Gross bookings rose 8% during the quarter, and Uber Eats revenue grew by 54%. Bookings Holdings reported an EPS miss by $1.37, but beat revenue estimates by $100 million. Gross bookings were down 51% in Q1 for the company, and room nights sold were down 43%. On Friday, investors continued to pour money into the markets. The Dow closed up 455 points, the S&P closed up 48 points, and the Nasdaq closed up 141 points. Markets continued to rise even though unemployment hit 14.7%, up from the 50-year low of 3.5% just 2 months ago. Some good news that did push the markets up was Apple announcing it will start reopening some US stores next week, and Google announcing it plans to reopen its offices in June. In retail, Nordstrom announced plans to close 16 underperforming stores, and there was news of JCPenney preparing to file for bankruptcy next week. There were no major earnings on Friday, but over the week, the Dow, the S&P 500, and the Nasdaq all closed up on the week. The Nasdaq even turned positive for 2020. In crypto news, for a second week in a row, Bitcoin put in a gain of over 16% on the week. This week, Bitcoin was up 16.2% and trading at $9,970. The digital currency did break $10,000 early in the day on Friday, but was unable to hold the level. Ethereum was up 1.3% from last week and was trading at $214.43. Litecoin was trading at $48.37, up 2.6% from last week, and Ripple was up close to 5% on the week. Crude oil also had a good week, closing Friday out at $24.63 per barrel, up 25% from last week's price. Oil prices saw a rise after China reported an increase in overseas shipping during the week. A big winner for the week was Bill.com Holdings, BILL. The stock was up 50% on the week after River Park Advisors highlighted the company in a recent published report. A big loser for the week was DB Crude Oil Double Short ETN, ticker symbol DTO. The instrument is a bearish play against oil, rising in price when oil prices fall and falling in price when oil prices rise. The ticker was down 43% on the week. That's a wrap for this week's market review. If you want to dig deeper into the headlines we covered, the links to the stories are in the description below, and a link to sign up to our weekend article in Focus is in the description below. Not to brag or anything, but we did put Netflix and Tesla and Beyond Meat in Focus before all three stocks experienced major runs. If you aren't already signed up to In Focus, go and check it out. Link is in the description below. Thanks again for checking out the Silver Report's market review. This channel is dedicated to anyone who wants to start investing but doesn't know how or where to start. If you have any questions, ask in the comment section. Like and subscribe, and may your next investment be your best investment. See you next week.